So I had a really interesting conversation with an advisor earlier this week talking about profit sharing plans and talking about retirement contributions. And for them, we ended up talking a lot about how when you're making these contributions into retirement plans, it locks box the money for you. And then in addition to that, when you do these profit sharing plans, depending on the composition of your employees, that might not be what they want either. And so when you look at it from a tax planning perspective for yourself, instead of pushing that money into profit share where you're just deferring these tax liabilities into the future, and also you don't have access to that capital if you say wanted to deploy it into an acquisition or reinvesting into the business, the same thing could apply for your employees. So in this situation, the advisor had a junior staff person who was working for him, just had a baby, just moved into a new house. And so for him, he would have much rather had a $20,000 bonus to his income versus a $20,000 contribution to a profit share plan where he couldn't use the capital either. So it's definitely a strategy where I see firms will get this in place thinking that it's attractive to talent. And a lot of times people just want the bonuses. They don't actually want the profit share. And on your tax planning side too, the profit share might not be the best move either.